Dale, good to see you. Thank you for sharing some time. Now, the thing that always kind of fascinates me about sort of China is that the news flow is always about what the GDP number is. But I guess it's a question that's relevant to sort of most economies, stock markets. What is the link, if any, between that GDP number about China and what's going on in the stock market?
It's a really interesting point, and I think what makes the China market really interesting from a bottom-up stock picking perspective, because as you said, there's so much focus on these macro numbers, and yet within that it sort of masks so much what's actually going on the ground. What I will say is that growth is clearly slowing. I think it's slowing for the right reasons. Whatever the final number for GDP growth is, I think you can be pretty confident that consumption is growing faster. Mm-hmm. So whether your number's 5 or 6, again, consumption growing faster, and that type of growth rate is a pretty strong economic backdrop. I'd be pretty disappointed if I couldn't find some decent growth stories, particularly in an economy that structurally is changing so much. So I actually feel pretty good about the opportunities, particularly when you do see sell-offs like we've seen recently about concerns about sort of broader economic growth.
So again, it kind of strikes me following on from that, and I think you've touched on it. There is just generally a bit of a misunderstanding for investors who are not close to this sort of China about the opportunities. And I know you've kind of been shifting the portfolio in the last couple of years towards sort of domestic consumption. Again, what does domestic consumption look like in sort of China? Because I think as investors we often sort of think, what's it like in our home territory, the UK, or look at the US. Is it different in China?
I think it's different, but in many cases there's significant overlap, and that's what I think gives me confidence about that thematic around the growth of consumption, the general development of the middle class. As economies developed in the West, people wanted their household items, their cars, etc., and you over time saw this premiumization. I think China in many ways is going through the same process. Okay, there's going to be certain idiosyncrasies, different types of products. There'll be some differences, but the broader development of just the consumer in general, I think, is the same, and that's what I think gives you confidence that this is a trend you can bet on playing out over the next decade and longer. And
we're seeing sort of a slowdown in the growth for some of the bigger luxury brands that are often Western brands selling in, but there's been this sort of growth in what I might call sort of domestic Chinese brands. I think you look at the top 10 brands in China now. I mean, IKEA is the one Western name that I would immediately sort of recognise, but the other 8 or 9, 10 are actually Chinese companies, aren't they?
Yeah, I think in general it's fair to say that you've got some very successful foreign companies in China, but I think it's fair to say you're seeing more and more domestic brands getting traction, and in many cases, I think for the Chinese consumer, there's less of a stigma about some of the domestic brands. You see, an example would be sportswear, where you see obviously your Nikes, your Adidas continue to do quite well, and yet you've got these up and coming domestic brands that are clearly getting traction as well. I mean, you'll still have those foreign brands dominating the premium part of the market, but that sort of, again, mass mid-level part of the market, you're seeing, the real development of some strong domestic brands.
And again, infrastructure has been the sort of rapid development of Chinese infrastructure. I mean, I can't remember their numbers. They're sort of so rapid. The development of new cities and railways and sort of roads. Is that still an important part of the investment story for you?
I think less and less so. As we've talked about, there's this rebalancing happening in the economy. So much of the growth in China, over the past few years has been investment-led, and there's been obviously increases in debt associated with that. And the government clearly wants to, and I think should move away from that model, focusing more on domestic consumption. So again, I think the consumption story is stronger. Having said that, there are pockets of areas where you still can have a pretty strong outlook for investment and infrastructure. An example being rail. I think rail, looking forward, despite really significant development of the rail network in China, both in terms of high-speed rail and metro, there's still a pretty strong outlook for development there. And it's pretty clear we're entering a slowdown in China, and there is potential for infrastructure investment to pick up in response to that. I don't think we'll see the sort of infrastructure investment that we saw in response to slowdown, perhaps. An example being after the GFC, but I think there is room for pickup, but I think it's important to be selective. And
often China is described as an emerging economy. It strikes me it has emerged. I mean, it's the second largest economy in the world. So in a sense, a lot of the time we're talking about it in the wrong sort of context. It feels more like a maturing type economy.
I agree. I mean, you think about the way areas like technology have developed, I think you can argue that China is, well ahead of the West in that area. You see areas like e-commerce. Already, e-commerce penetration is well beyond the levels of penetration that you see in the West, and still growing strongly. I mean, that penetration rate is rising significantly. Mobile penetration, things like mobile payments. Everything, the majority of transactions that you see, for the consumer in China is now done on mobile payments, whether it's Alipay or WeChat Pay. It's the penetration is significant. We have some of our analysts in Shanghai who haven't used cash for months.
Yeah, that's interesting. Now, I know, just sort of going through some of the stocks you've got in the portfolio, one that struck me straight away, I know nothing about it, is a drone manufacturer. Right. Talk to me a little bit about that one, but also some of the other kind of companies that you've got in the portfolio. Yeah,
it's interesting you focus on them. It's worth highlighting that this is one of the unlisted companies in the portfolio, and I think that's, again, what's special about the trust, the ability to invest in these companies pre-IPO. There's so much economic activity on the ground in China that's happening in companies, in the pre-IPO stage. I think it's fair to say companies globally are coming to market later, and so we have the ability to invest in those companies. And this is, a true global leader. So 70% market share in the consumer market. What's really exciting is the growth in the commercial side. So across a range of industries, whether it's inspection, surveillance, agriculture, etc., you're seeing drone usage increase. And this is a market that in the long term has potential to be much bigger than the consumer market. So as a leader in that space, I think there's really great potential for this company.
And you've touched on some of the mobile payment businesses, right, which people might be familiar with. What are the other areas where you're sort of finding some really interesting opportunities, or importantly the analysts who are on the ground there are finding them?
Right. Well, to be honest, it's really about I think consumption is sort of the area where we'd still find the most interesting ideas. Obviously, in technology, there's still new business models emerging. There's opportunities in areas like, for example, live streaming, where you're sort of seeing different business models emerge. The broader thematic is the same. I think for example, growth in healthcare is an area that has still got really significant growth potential. But at the end of the day, I come back to consumption. We talked about the emergence of local brands. Being early to identify those types of brands and the companies that can dominate in those areas, I think is probably where we spend most of our time trying to find the ideas.
Within the portfolio, how do you achieve diversification without over-diversifying and sort of giving up some kind of really meaningful upside and contribution from great stock picks?
Yeah, I think it's focusing on really those broader trends, just rising penetration across a range of categories, and just natural development of the economy. So we've talked about consumption. So obviously a lot of time looking at those areas. Healthcare is an area that is going to grow. Another area that I think is interesting is the development of the financial markets. So you've got a lot of in a lot of cases the markets are sort of very early stage of development. That these markets are going to develop over time. The strength of local stock markets is going to grow over time. So, areas, whether it's securities broking, asset management, insurance, all these types of areas, I think offer significant opportunity. And actually now with the correction in markets are trading at pretty attractive valuations as well.
Which is a nice point to bring in the sort of the trade wars, which, for people who are kind of not invested in sort of China, it's a bit of an overhang. What's your sort of general sort of reading of that sort of situation? And do you think it's had much effect on the Chinese stock market?
I think it has had impact, definitely, and it's impacting, I think, investment decisions in China currently. I was in Shenzhen last week, and meeting with a lot of companies, some of whom operate more on a global basis, and clearly, it's impacting, I think, their investment decisions. I should say, they're impacted more by a general slowdown. We've seen a slowdown in credit, so that sort of impacted growth as well. I think the thing they're most keen for is just more certainty about how things are going to play out. Obviously, I think the recent discussions seem to be moving in the right direction, but I think the thing they're most looking for is clarity about the future, and I think in the coming months, there's increasing potential for some sort of deal to emerge.
And looking at the performance of the investment trust, sort of, how do you kind of review the last sort of 3 to sort of 5 years?
Yeah. Well, I think obviously performance has been good in the long term. Be very honest and say it's been a challenging 12 months.
You're probably not alone. I think hardly anybody in any market made money last year.
Yeah. So reflecting the opportunities that I see on the ground, the leverage in the portfolio has been relatively high, and obviously in a down market that can be a drag on performance. But it reflects the opportunities that I'm seeing when I'm seeing things that are cheap with strong fundamentals. That's the time to be using that ability of the trust to invest in those opportunities. And I'm confident that they'll come through over time. We've seen a correction in some of the tech names as well, and that's sector-wise has clearly been a drag on performance. But again, I think the outlook is pretty strong in the midterm for a lot of these companies. And then finally, the trust does have a mid to small cap bias, and interestingly, these have been quite big underperformers relative to the large caps, particularly in the last 12 months. So. The hope is, as markets develop, more of these smaller names where we're really leveraging the strength of our team to find these names. Hopefully the market, these names become more well understood by the market, and that gets reflected in stock prices.
And just finally, I mean, I guess the question investors always ask in their mind is kind of active versus passive. So I'm looking at China. Why would I buy an active portfolio like special sits, or as opposed to buying an index product?
Yeah, I think it comes back to the exact point that we were talking about earlier. People are, we think about the growth in China and we're focused on this one number, but behind that, there's so much structural change. You've got parts of the market and the economy that are growing at 20-30%. The other side of that, you've got areas where you're seeing pretty significant declines. You've got big divergence between private companies and state-owned companies as well. And I continue to believe in the midterm, it's the private companies that will continue to develop faster, and where the real new China story is. So, I think when you're investing in China, you need to be selective. It's such a diverse market, and so I think from my perspective, active is clearly the way to go in the market.
Lovely, Dale. Good to see you again. Thank you.
Thank you.